All right, what's going on, traders? This is Dada FX, and today what I'm going to be speaking to you about is GBPUSD. Now, getting right into it, I'm going to try to do a more or less a top-down analysis. We're going to be starting off on a monthly time frame, and I'm going to be giving you my perspective on what my bias is, short-term and long-term for this pair. So, getting right into it on a monthly time frame, what I'm noticing is a strong structure being broken. Okay. Now, that strong structure that's being broken is right here. We see that price rejected this structure, this area of resistance once, then twice, then for a third time, it actually rejected back to the downside before making an impulse to the upside. Now, another thing I noticed is this W formation right here. And, from a technical standpoint, we do know with the W formation that once it breaks the neckline, we can expect a push to the upside, regardless if it retests that neckline or not. But keep in mind, we're on a monthly time frame. So more importantly, what I'm noticing here is that on that third time, we see this rejection from the 1, 2, 3. And I know there's more rejections in the past, but just focusing on this right here. We see that there was an impulse, retracement from, this rejection right here, then impulse. So once again, I'm going to say that again. Impulse, retracement, impulse. So obviously, we should be expecting some kind of retracement once again at some point. Now, right now, the first thing I'm noticing is that this structure right here could possibly be lining up with a fib level, right? We see that price is within this Kumo from our indicator, the Ichimoku Kinko Hyo. And specifically, what I'm going to do right now is I'm going to draw a fib from the swing low to the swing high. All right. And this is how we're going to measure our retracement. So we're going to take it from the swing low. So we had the impulse, retracement. So we're going to start from this retracement, the swing low, and then we're going to go to the swing high, right? Now, what we notice here is that the 0.382 is lining up very well with this area of structure that price found resistance at multiple times. So it's only logical to think that price could be coming back to test this area as support now, because as we know, any area that is previous resistance can become support and vice versa. More importantly, I'm definitely expecting price to pull back into this area to grab some liquidity, right? We want to see price pull back into this area to grab some liquidity and make a move back to the upside. Now, why am I saying that? Grabbing liquidity. I'm going to take you to the COT legacy report. Now, if you don't know what this is the commitment of traders report. And this is what the hedge funds are doing in the market right now. These are what the big guys are doing, non-commercial specifically. And we can see as far as GBP goes, right? We're on British pound sterling. What we see is all the way from the beginning of December 2020, we have a lot of net positions being added, right? And these net positions are the difference between the longs and the shorts. Now, overall, you can see that there's been more longs than shorts in regards to GBP. Now, most recently, we can see that there was a massive amount of shorts added, right? But overall, we're still long opposed to short from a non-commercial point of view, a speculative point of view. Now, these market makers, we can assume that price can definitely pull down to this area, if not, further down below or slightly above, to grab liquidity in this area to then push price back to the upside. right? Because we know that overall it's overall long, but this massive amount of shorts can obviously give us some kind of direction short term of where price could be going. So taking you down to the let's take this down to the weekly time frame. Immediately what I notice now, just as a side note, I know that we have 3 days and an hour left on this candle, but I noticed that we've got some equal highs right here, right? We got equal highs. Now before that, price broke through and created a higher high, then a higher low, then a higher high, and now we got a higher low. If this closes, as a bearish candle. Now taking it down to the daily time frame, taking this down to the daily time frame, boom. What do you see? What do you see in this area? I know personally I see an M formation or I see a double top. Now, if you don't see this double top, what you can always do is you can switch the format of your TradingView price action from candles to a line. And you can clearly see the formations of price action better, right? So we got this clear M formation going on. And what I did is I pulled up a M formation just in case you don't know exactly what that is, or a double top. So clearly you can see that it is a bearish pattern. And more importantly, this bearish pattern usually fulfills a retracement back to the neckline, which isn't shown on this, but usually that's what can happen. Now, from a short-term point of view, I am looking to short this pair. Now, where am I looking to short this pair? We are actually already in a bearish environment on the 4-hour to short this pair. As far as trend lines go, we've broken the trend line. We've definitely broken the trend line already. We've already broken the trend line on a daily. On a 4-hour, you can see price has broken the trend line and it's even retested a previous support and has made it resistance, as we talked about previously. Where? Right here. Right? That's where we see the previous support turn resistance. Now, obviously, I don't plan on, shorting at this low. It wouldn't make sense for me to. So I expect price to make a move further down and possibly break this previous support here and obviously break these previous lows and retrace from the downside and create a resistance here. And that is where I would ideally sell. Now, this is from a short-term perspective, because what I want to keep in mind is the COT legacy report. And specifically, this information here is non-commercial. We're not focused on the commercial aspect of things because that is not what we're looking for from a speculative point of view. But as I'm saying, the hedge funds, you can see that they're overall long. So you know that they're overall long and the direction of GBP is very strong. But from a short-term perspective, they've added a lot of shorts where you can expect price to be pushed down at least to this 0.382 retracement zone from the monthly time frame, which is also the neckline. I believe it was that neckline on a monthly time frame of that W, if I'm correct. Yeah, we can expect price to come back down to here. And this is just my assumption, take it with a grain of salt. So on a 4-hour, I would be expecting price to come down to this area. Now, from this area, we've got a pretty good risk to reward ratio that we can have set up here from a short position. Now, obviously, it hasn't created a new lower low and lower high for me to really go into detail of how I'd set up my short position. But just say, you put your short at price right now, right? It's 4:07 p.m. Eastern Time, February 2nd, 2021. If you were to put your stop loss above market structure, so your stop loss is protected by market structure, and there's other confluences you can use, you got a pretty good risk to reward, a 1 to 5, if you were to take this back down to this area right here. That's 321 pips. It's pretty nice. It's obviously a swing trade. We don't expect this to happen overnight, but this very well could happen. And that's from a short-term point of view, if you were to take a trade right now. Preferably, I would like to see this structure broken and creating a lower low and lower high and selling at that lower high. And if I were to put my EMAs, you would probably more than likely see the EMAs above price, showing that we're in a bearish environment. And price is already under the MACD is already under the zero line to show that we're in a bearish environment, to confirm a short. So you can short, preferably from my point of view. Now, once price gets to this area right here, I'm not going to be looking for shorts anymore. I'm going to be looking for a long. And what I'm going to be waiting for is for price to show me some break of structure, some higher highs and higher lows, for my price to be above my EMAs, and for my MACD to be above the zero line. And that is where I'll be looking to set up a long position for the long term with GBPUSD. So as far as this pair goes, short term, I'm looking to short. Long term, I'm looking to long. And that's pretty much overall my perspective with this pair. So I hope you enjoyed the analysis. And if you have any questions, thoughts, please feel free to comment below. And I'm looking forward to doing another pair soon. Stay tuned. Have a good one.